The global economy is about to be rewired from the ground up. BlackRock's head of global tech equities just compared AI's impact to 10 Manhattan projects happening simultaneously. This isn't hype. This is trillions of dollars shifting beneath our feet. And if you're not paying attention, you're already behind. Tony Kim, who manages billions in tech investments at BlackRock, says artificial intelligence is fundamentally restructuring how the entire world economy operates. We're not talking about a new product or a hot sector. We're talking about a transformation as profound as electricity or the internet, but compressed into a fraction of the time. The Manhattan Project reshaped geopolitics and technology in under 5 years. Now imagine that scale of disruption multiplied by 10, all converging at once. That's what Kim sees unfolding right now. Markets are already digesting this reality. The Magnificent Seven tech stocks have driven most equity gains over the past 18 months, but it's not just about Nvidia selling chips. Microsoft, Amazon, and Google are spending hundreds of billions building AI infrastructure. Power companies are scrambling to meet unprecedented electricity demand from data centers. Chip fabrication facilities are being built at record pace. The capital expenditure cycle alone represents one of the largest investment waves in modern history. Bond markets are watching inflation implications. If AI boosts productivity fast enough, it could dampen wage pressures. If it doesn't, and energy costs spike from surging power demand, we're looking at a different story entirely. The winners are obvious on the surface, but deeper than you think. Semiconductor companies are printing money. Data center operators and cloud providers are seeing explosive growth. But look further. Industrial companies supplying cooling systems, electrical grid infrastructure, even specialized construction firms are benefiting. Utilities with spare power capacity are suddenly strategic assets. On the losing end, any sector built on routine cognitive work is facing existential risk. Business process outsourcing, basic legal services, entry-level financial analysis, these jobs are being automated at stunning speed. Traditional software companies without AI strategies are getting left behind. Even some tech firms are losing relevance if they can't pivot fast enough. Different countries are experiencing this shift very differently. The United States is dominating AI development and reaping massive investment inflows. China is racing to keep pace despite chip restrictions. The European Union is struggling with regulation-first approaches that may cost them competitiveness. Taiwan's central role in chip manufacturing makes it more strategically critical than ever. India sees opportunity in AI services, but also faces disruption to its massive outsourcing industry. Energy-rich nations like Qatar and the UAE are positioning themselves as data center hubs. Countries without cheap power, computing infrastructure, or technical talent risk being left out of the value chain entirely. The job market is splitting in two. High-skill roles creating, deploying, and managing AI are commanding premium wages and exploding in number. But middle-skill jobs involving predictable cognitive tasks are vanishing faster than new ones appear. We're seeing tech companies hire AI specialists while simultaneously announcing layoffs in traditional departments. Real estate is feeling the impact too. Data center construction is booming in key markets, driving up land prices and straining local infrastructure. Meanwhile, office space designed for white-collar work that AI is now handling sits increasingly empty. Watch three things closely. First, power grid capacity and electricity pricing. If infrastructure can't keep pace, the entire AI build-out stalls. Second, regulatory moves, especially from the EU and China, which could fragment the global AI market. Third, corporate earnings from companies outside big tech. When they start showing productivity gains from AI adoption at scale, that's confirmation this reshaping is real and spreading. If those gains don't materialize within the next year, expect a major market correction. Stay informed, stay ahead. This is World Financial News.